folks, it's about to be a crazy week in the market this week. Yes, a lot to get into in this video, a whole lot more than just earnings we're going to get into. I got some really interesting charts to show you guys in this video here today, as well as some perspectives on kind of what to look for this week, and not just what to look for in this week, but over this next month or two, okay? So essentially starting out here looking at earnings, I could tell you we're starting to get into that small cap season. If you notice this week, we got a lot of smaller cap stocks reporting, a lot of stocks that are heavier in the retail crowd. So Monday, Lordstown Motor, that's still one that a lot of retail folks still hold. Party City, another one that a lot of retail folks hold. Then after the close Monday, you have Lucid. Lucid's going to be interesting to hear what they have to say about production as far as getting their cars into any sort of mass production. Let's call it that. And I can't even really call what they're doing over the next year or two mass production, but at least getting it scaled up, right? So we know a lot of folks have started to take deliveries of Lucids, and so that should be interesting to kind of hear commentary about them. Zoom's going to be interesting to hear what is their guidance for 22 looking like, how confident are they in their business model going into this year with obviously a lot of offices opening back up. And this guidance is going to be very, very key. And here's the reason, okay? This guidance is going to be very key because everybody all year is going to track those numbers that Zoom initially gave. Now, if Zoom, you might think, well, maybe Zoom is going to go in a little more bullish. If they go in too bullish, and as offices open up more and more throughout the year, I can tell you that's going to set Zoom up in even a bigger disaster situation. We know the stock is already down like 80% from highs or whatever. If they try to sugarcoat the guidance in any way, shape, or form, and they come in to disappoint, their stock's going to continue to get hit, and next thing you know, it's going to be under $100 a share, which is a far fall from where it was at its highs of 400 plus. So that guidance is going to be extremely key. If they guide too high, yeah, that might help out the stock here in the short term. It also might not. Zoom's might be one of those that's just in a tough place period. So that guidance is going to be key. They better not overpromise. That's all I can say about that, okay? Workday is also another interesting stock there. Smile Direct Club SDC. This is one I personally have just started buying very recently over the last few months. And it's around $2 stock right now. What's going to be very important for Smile Direct Club, this is the most important thing, is how big is a loss they're expecting in 2022. That's what's going to be key, because everybody's looking at Smile Direct Club like, yeah, it's a revenue growth opportunity over the coming years. It's a bigger brand opportunity over the coming years. But are they going to make it to those future years, because they've been losing a fortune recently? As long as they continue to make progress over this next 12 to 24 months, as far as those losses are getting less and less and less, that's what's most important with Smile Direct Club at the end of the day, and people want to see revenue growth as well. As long as they can grow and shrink those losses, hey, it's thumbs up, okay? And that'd be a lot more than a $2 stock in future years, as long as they can do those things. Tuesday, you got the most well-run physical retailer in the world, in my opinion, in Target. They're just unbelievable company. Like, I've just consistently impressed by Target. I mean, just consistently impressed. They're amazing. That's all I can say about it. They're amazing. They stay in front of everybody when it comes to their brands. They take into their stores. They're just a 10 out of 10. Sometimes we do like the pickup at Target, where you have to drive in, and they put the stuff in your car. You do it on your app. My wife does that all the time, and always that's busy as well. Plus the in store is busy. Like, Target, man, do they knock it out of the ballpark. Baidu, not too interesting. Domino's Pizza, not too interesting as far as that goes. Workhorse, another one of those stocks that is still fairly popular in the retail crowd. Not like it once was, because those stocks have done so bad, but they're still a little popular, just a little more on the DL, whereas when these were the hype stocks a year and a half ago, everybody was talking about them all the time. Now people are real quiet. So they're kind of like retail names on the DL, that and Lordstown Motors. You have Kohl's reporting, not too interesting as far as Kohl's go. AutoZone's probably the sneakiest great stock for the past 10 to 15 years. Like, pull up a stock chart of AutoZone over the past 10 to 15 years, and it's amazing. Like, the most simple stock in the world. Like, it doesn't get much simpler than AutoZone, but that stock, like, flat out, you bought that stock 10, 12, 14 years ago, you have made a ton of money on that stock, and I mean a ton of money. It's just they consistently, put up great numbers. SoFi. So coming off the Super Bowl, what does that do for them? Does that do anything? They spent so much, on obviously the advertising that stadium, and obviously the Super Bowl there was big. But like, what does it add up to in numbers? The trouble is they spend a lot of money on obviously ad spend and those sorts of things in marketing just for their business, and is it adding up to the numbers at the end of the day? I think that's the most important thing for SoFi personally, okay? I gotta be honest, I don't know anybody that uses SoFi, and I find it a little troubling because I see them spending so much on marketing all the time, and I'm like, how do I not know one person that uses SoFi in real life? Like, literally not one. So, yeah, I'm interested to hear the numbers there. That stock's just, gotten hammered and hammered. AMC, oh man, another huge one with the retail crowd. AMC stock, a lot of people, went into that movement obviously last year, and now are still holding those shares. We'll see what happens there. Plug Power, another one of those. I mean, you want to talk about maybe the heaviest week for retail investors or retail traders, whatever you want to call the folks like that. Man, there's a lot of those stocks. So you see Plug Power, AMC, SoFi, Workhorse, Lordstown Motors, Lucid. I mean, my gosh, okay. Yeah, be ready for an eventful week for the retail crowd. Salesforce is just a beast, great business, just flat out. Wish, another retail heavy investor trader stock is Wish stock, and it's attractive for a lot of folks because they look at it, it's like $2 a share. It's been falling. The stock's down like, 90% or over 90% from its highs it reached a little over a year ago. And it's a company that people wish could become like the next Amazon or something like that, but it's tough sledding. I've looked at their business model. That's another one of those, and I'm like, do I know anybody in real life that uses a Wish? I do not. That's a tough thing for Wish, but we'll see. Dutch Bros. I mean, literally, could they have just put every single stock that is like, I don't even want to, not that people call these meme stocks. Like, I call them retail trader investor names. Could they have just put every single one of them in this week? I mean, it's insane. Then you got Dutch Bros, which is another one of those stocks. And then you got Biogenomics, another one, Bionano. I mean, literally, it is ridiculous. Okay, Nordstrom, JWN, I love this one as a dividend play, and I love it just as a company in general. Just great brands, solid company, solid execution. Not going to be a stock that, probably 5X's your money over the coming years, but just a solid, good company that's very, very well run. And Nordstrom, I think they're going to have a strong 22. Let's put it that way. Celsius Holdings, another super popular stock with the retail investor and trader crowd. I mean, my gosh, it's like they said, let's just get them all done in 1 week. Essentially, it's insane. Celsius is a growth beast. Valuations come down a lot on Celsius, okay? But when it comes to Celsius, it still trades so dang rich. I still can't touch that stock. And it frustrates me because it's a drink-related company. I love drink-related companies, food-related companies. That's right up my alley. But I can't buy that. The valuation is too much, man. It's too much. You got PaySafe reporting, Abercrombie & Fitch, Dollar Tree on Wednesday before the bell there. Nothing else too interesting to me. Now, after the close, Snowflake, this is a super high growth, super high valuation name. That one could potentially move Palantir a little bit on Thursday, essentially, depending upon what their numbers are and what their guidance is, things like that. We'll see what happens there. I mean, that stock is just, I feel like it's priced to perfection, to be honest, in Snowflake. That's just a tough one. ChargePoint, another. And then, come on. C3AI, like seriously, they just wanted to put every stock that retail traders and investors hold in this week. It's insane, man. You got VS, who split off from Bath & Body Works, which I think was not the best decision there, but they did it. They're reporting earnings there. Nothing else interesting. Now, before the open, Best Buy, I'm going to see what their earnings are. Obviously, big customer, Corsairs. Big customer, Corsair, CRSR, which is a stock I personally own. I want to hear what Best Buy has to say. Kroger, biggest grocery store chain out there. I think that one's just interesting from a perspective of what do they have to say about inflation. Obviously, there's no one bigger than them when it comes to just a pure grocery store chain play in the United States of America. What do they have to say? I'm going to be interested to hear that. Nothing else too interesting from me there. After the close, Marvell Technologies. That one's pretty intriguing. You got Costco reporting. You have Broadcom, big semi player there reporting. Smith & Wesson, who's just, usually does their thing, reporting there. And then nothing else interesting. But my gosh, guys, you want to talk about a big week for the retail crowd? That's this week. There's going to be a lot of fortunes made or fortunes lost this week. I can tell you that much. Woo! Options activity is going to be crazy. And meanwhile, on top of all that, this is another big week for the Russia situation, right? Whatever happens with the Russia-Ukraine situation, that could also move the market this week. So, wow. I mean, for the retail crowd, this is the Super Bowl week for the retail crowd this week. I can tell you that, okay? Not for me really so much. I don't have a lot of companies reporting earnings. I got a few. Most of my companies are going to be reporting over the next 2 or 3 weeks. But for the most folks that are in the market from the retail side, this is a Super Bowl week for a lot of folks out there. Okay, let me know if you got any companies reporting earnings this week. I'd love to hear from you guys in that comment section. As always, and by the way, also check out pinned comment if you want to sign up for our email newsletter, Hungry Bowl. You can send it to your inbox every weekday. It is freaking amazing. The guys write it up custom every single day, keep you up to date with the markets, what's going on, and including maybe even some interesting stuff like this right here, okay? So, if you didn't know, last week, there was something very important happen, and this rarely happens. Essentially, the NASDAQ had a 5% plus intraday reversal from the open. Now, one thing you're going to understand is this does not happen very often. As a matter of fact, this happens very few and far between that this ever happens. But when it does happen, it's usually a bad sign, unfortunately. And I hate to ever give anybody bad news, but this is kind of like a little scary. So this happened several different times when the tech bubble was just, okay? Several different times this happened. So a lot of folks are looking at this and they're like, okay, that's pretty scary. When's the other time this happened? Well, basically when the stock market was crashing during the housing crisis, yeah, plus that was an overall financial collapse, almost crisis we had going on there, right? So, and that's it. That's it. So, I mean, scary? No, I think there's a few things to keep in mind here, okay? First thing is, just because this happened in the past does not mean, oh, this is 100% means we're just going to trend down now and we're going to, fall another 10, 20, 30% in the markets. Does not mean that. It could be a possibility, but do keep in mind, when these other two things happen, there were some actual fundamentals going really bad in the market. Is this a situation where that happens again? It remains to be seen. I can tell you right now, things look pretty darn good from the economic standpoint. Inflation's high, but my gosh, are people spending money? You'll see that in the next quarterly earnings. A lot of these companies are going to report. Man, are people out there spending money right now? Housing strong. Stock market's not strong, but it's also not, completely devastated other than, small caps. So I don't know. We'll see what happens. It's certainly not comforting when the only other times you can go back to is when the tech bubble was bursting and when the housing bust happened. That's not comforting. Let's hope that doesn't happen because, man, things will get a lot uglier and you better be ready to buy over the next year or two if that's a situation, right? Because, yeah, we'll see what happens with that. I hope you guys enjoyed me showing that little chart there. I think that's just an intriguing one. This one might even be more intriguing here. So what you're looking at here is essentially, what's going on right now is midterm elections, or what's going to go on this year is midterm elections. They're not technically going on yet. Voting for that will be later this year. But we're in a midterm election year right now. And this shows you S&P 500 pullbacks. Okay, S&P 500 has averaged an intra-year, I guess I used to say an intraday all the time, intra-year pullback of 17.1% in midterm election years. What this means in the simplest terms possible is the market is usually crap. And I mean total crap in a midterm election year, okay? Just think about a midterm election year and say, I'm expecting a bad market nonetheless, okay? The last 3 months and the first 2 quarters of the following year is highly bullish, averaging 32.3% return. That's amazing, okay? But, I mean, you look at the intra-year declines for midterm elections, it's usually quite ugly. And here we are in another moment in time where we got a midterm election going on, and we're in another ugly market. We're in another ugly market. NASDAQ briefly hit bear market territory this past week. It climbed out of that, but it briefly hit that. Russell again hit bear market territory, meaning it's down 20% plus from highs. It hit that again this past week. That's the second time in a month it hit it. And so nonetheless, if we go based upon history, this is just not a good year for stocks, or at least an intra year. However, and this goes to what Wall Street's been saying. A lot of Wall Street's been saying, hey, expect a strong back half of the year. That's what they've all been saying. Expect a strong back half of the year and a volatile first half of the year. What have we getting so far this year? We're only, we're still in February technically. In a little few days we'll be in March already, right? But so far, it's been extremely bad and extremely volatile. So maybe they're right, and maybe history, serves us right here, and the back half of the year ends up becoming really, really strong, and the market does very, very well. But for right now, it's ugly, and if you go based upon history, it kind of, makes sense, okay? Now, I thought this was important. This was obviously 2009 through 2019, and I'm sure some of you guys have seen this chart before. I think it's really, really important to look at this because in times of volatility in the market and a lot to be fearful of, I think it's very important to just think about all the bad stuff that happened. And I know a lot of folks watching this video, you probably weren't in the market during all these years. I would say probably only 25% of the people watching this video right now, you guys were participating back in 2009, 2010, 2011, 2012, and all these years. 75% of you guys, if not more than that, you weren't around for these years, essentially. A lot of you guys started investing in 2019, 2020, 2021. And so, you didn't go through these time periods, but and so if you're newer to the market, sometimes you think like if something bad happens or something scary, like, oh my gosh, to like freak out because you're not used to that, right? But all along, we've had so many scary things happen over all these years and just all these fears that really shook up the market and caused a lot of panic in the market at different times, or people to exit the market because they're like, oh, something, this happened, that happened. And, ultimately, what did it end up to? Just the stock market being a lot higher, all that fear, all those scary things. And, at the end of the day, did it really end up doing anything? It really didn't end up doing any dang thing, okay? This is somebody in the Discord chat sent me this, I believe it was Shane, and thank you for sending me this. They DM'd me this. I thought this was just important. Things that matter, things that you can control, and, what you should focus on is when you get that overlap of things that matter and things you can control. In the market, you can't control any of this, right? There's so much shaking around and so much moving all the time that you just have to kind of block all that crap out. You got to say, what can I control? I can control if I listen to some earnings calls. I can control if I'm researching companies. I can control if I'm running valuations and understanding why the stock is undervalued. You can control all those things and putting in that work, right? You can't control the next geopolitical situation or the next once in 100-year pandemic that's going to come out of nowhere. You can't control that stuff, so you might as well not even focus on it because it's just a complete waste of your time. For your own mental health and for your own success, ultimately your own success in business and in life and with money, you got to focus here. And if you focus on anything of that, you're just wasting your mental energy. Because you can't control it, and if you can't control it, or you can control it and it doesn't matter, then it's completely worthless. You got to find that beautiful intersection there, okay? So I thought that was just really, really important. Always remember this little part of this video. Always remember this. This is something that, remember this for life, okay? Remember this little part I'm sharing with you right now. Remember that for the rest of your life, because I think that's really, really darn important, okay? No, in a volatile market like this that's shaking around a lot, folks ask me, like, how can you, like, hold so strong, and, like, how can you be kind of, like, level-headed and just, like, see stocks go into bear market or whatever and just buy and hold and not, like, freak out and things like that. And I think it's important to remember, like, from 2009 to 2019, 90% plus of my entire net worth was tied up in the stock market. And not just tied up in the stock market, but tied up in individual stocks. And most of that time, I had my money in 10 stocks or less. 10 stocks or less, okay? And so when you come from that sort of mentality, what am I going to get scared over? I just showed you the chart of all those years, through that time, 2009 through 2019, all those times to be scared. And yet, I had 90% plus of my entire net worth tied up in stocks. I didn't buy my first house till I was already a millionaire. And that's just the way I lived. And so for me, like, it's nothing for me. Right now in 2022, I'm the least risky of any time in my entire life, right? I'm about 50% stocks. And then I was really running numbers. I was like, I didn't even realize, like, how diversified I was nowadays. 50% of my money is in other stuff: real estate, business worth, short-term assets, crypto's a really small part, cars, other stuff like that. Like 50% of my net worth is tied up in other stuff. Actually, only 50% of my net worth is actually tied up in stocks nowadays. So I have actually way de-risked me. So the fact that only 50% of my money is in stocks nowadays, oh my gosh, like, I feel like it's nothing to me. If the market goes down, if it keeps going down for the whole year, who cares? I'll just continue to buy the dip, hold great companies. A lot of these stocks are already steal deals and a half. And if they were to go down more, cool, I'm just going to buy more shares and increase my ownership. And if they go up, then great, that's fine as well. So that's how I kind of hold steady. Is just I've mentally trained myself a little different, and that's why I just don't freak out in the market. Speaking about not freaking out in the market, get your free stocks and make sure you freak out over that, because that's pretty awesome. Get those free stocks. It's basically like getting free money. Signing up for Moomoo, set up an account there, and free TTCF share with a $100 deposit. Hope you guys enjoyed this as always. Keep your head out there. Much love and have a great day.